Things are popping here at Biz Talk Today TV. Today is the debut episode of Financial Compass with Mish Schneider. I'm your host, Todd Schoenberger, and the star of the day is none other than the chief strategist at MarketGauge.com, Mish Schneider. Mish, how's it going today?
Well, we're getting ready for the holiday. We're looking for Santa in the market. I'm really excited about this opportunity that you and I have now going to be doing as we get into 2026. So I thank you so much for that. I so appreciate your support and your trust in me. So everything's great. Everything's great.
Outstanding. Well, listen, you're a superstar. You're very knowledgeable. You bring a lot of value to the audience, and I know everyone's going to get a lot out of these shows. And just so everyone knows, the plan is to air Financial Compass with Mish Schneider every Thursday at 12 noon live. And of course, it will be available on demand on the BTT network. So more about that later on. But Mish, let's start off the show. I got to say, you came out talking about 2026. You are now saying that next year is going to be a classic Yang Fire Horse type of year. Now, for those viewers and listeners out there who are not familiar with the phrase, can you explain what the Yang Fire Horse means for maybe in plain English?
Yeah. Okay. Well, first of all, this is based on Chinese astrology. It goes back thousands of years. And there are 2 billion Asians in the world, give or take. So it's really hard to argue with something that collectively a good portion of the planet's population believes in, right?
Mm-hmm.
I discovered this guy, Raymond, and it's kind of fun, right? You've gone to Chinese restaurants where your placemat is all the different years of, and everybody says, oh, what are you?
That's
Oh, you're
right.
the horse, you're the monkey, you're the rat, whatever. So it's always been kind of like a fun thing that Americans do just when they go to a Chinese restaurant. But I got seriously interested in it about 14 years ago when I discovered this guy, Raymond Lowe. So Raymond Lowe, he is all over TV generally at this time of year, but he does a lot of education in terms of feng shui, and not like the kind of feng shui we think of as Americans, like, oh, you shouldn't have a mirror in this room because it's bad feng shui. He really adjusts everything relative to the predictions that he has for the coming year, based not only on the animal totem, but also on the elements. And I think the elements are super interesting. So this year, I should say, as we're coming out of a year of a water snake, a yin water snake. And so if you think about this year, we've had very much a snaky kind of year in that it's coiled, it's hissed, it's spat, and then it goes back into just like sort of mellow, peaceful rallies, which is kind of where we're at. But it was a water year, and it's been a water year for years, which means that some industries have done very, very well. But a lot of industries, and this is the great rotation that we might be seeing into 2026, have not, and they've needed this element of fire. So now let's think about a horse, right? So I'm born the year of the horse, by the way, and Raymond Lowe would have a lot to say about that. But nonetheless, I'm interested in what he has to say is how this will affect industries. A horse, what does a horse do? It grazes peacefully when it's in the stable. But as soon as you let it out, it can gallop very fast, or it can buck when it's spooked. And I think that's the volatility that a lot of people are expecting for this year. And then the fire part means that certain industries will thrive while maybe some other industries will not, number one. And number two is, even from your own personal life, it's saying you should be careful in like a kitchen where there could be fires. There could be fire erupting around the world. The last time we had this year, by the way, was in 1966. There's also predictions about China doing very well, but threats to Hong Kong. It's really interesting. If you go to his website, you can read more.
Well, I know you're working very hard on all of this at MarketGauge.com. So with that, are you suggesting that we're going to have just really volatile, just an up and down pattern next year, or are you seeing pockets of growth? I'm just trying to understand.
Well, I think we're going to start out of the gate with the horse more of in a gallop, right?
Okay.
Because a lot of things have been put into place to make that happen. Obviously, the Fed has cooperated here with another interest rate cut, plus the dovish statements that came out of the Fed, even though there is dissension. We know that Powell is on the way out. Obviously, the administration wants to put a more dovish Fed chairman in there. Number one. Number two is that they don't call it QE, but they're buying back their own treasury bills. I mean, money supply is increasing. So this initially is very good for certain aspects of the market. That's why I see the Gallup coming out, and we're already seeing it, like in transportation, which has been kind of a laggard, especially when you compare everything to semiconductors, is now making new highs, which is extraordinary when you think about it. The Russell 2000, which has still been asleep at the wheel again against semiconductors and AI, also now breaking out. Even retail, although not still anywhere near 2021 highs, doing very well on new 52-week highs. So this is where the Gallup starts, where people start to get a lot of confidence in the market. What could keep that horse going until it bucks would be a few things that we have to worry about, right? So that's why I think this is an interesting concept. Number one, of course, on my list would be inflation, because all the policies that are now put in place can be inflationary, even though we're not seeing it in the CPI. Retail in and of itself is still worried about inflation, and wages have not kept up with inflation. We're seeing hard assets looking very interesting for 2026, certainly silver and gold, which, I've been all over that for like 2 years now. See no reason why that can't continue. So that and also the fact that we have midterm elections coming up. And midterm elections, if you look at the last several midterm election years, have wound up to be a sell-off, maybe ultimately a buy opportunity, but still a sell-off that you want to make sure you're not in front of when that horse bucks.
Okay. So history does show us, though, that when the Fed does cut rates, you brought up the Fed and yesterday's decision of cutting 25 basis points. And we have seen in history that when the markets are near all-time highs, at least within that 2% delta there, that we see, again, more of an extension of market gains in the next rolling 12-month period. Is this Yang Fire Horse theology, does that support that thesis, though, that we're going to continue to see growth next year?
Well, right, because essentially what it does is it tells you that there's confidence. People are willing to take more risks. People are willing to spend more money. People are more willing to speculate. And, horses, what do they represent? They represent freedom. And so that's why I think we can see these sharp rallies basically right out of the gate, like I say. But I also see, as we're already seeing, these dramatic rotations. And we'll see some really big winners, and we'll see some pretty big losers as well. So I think that you have to approach this year with all of that in mind, but keep also in your mind that volatility is very much part of fire. And they're saying, in terms of the astrology, but it makes sense anyway, just from if you look at the cyclicals with midterm elections, that from February to July, we can see a big rally, but August, as we end into the following January, we could see a lot of chop, maybe a bigger sell-off. So that's that's something that I think you have to keep an eye on. And then there's specific areas that we'd be really interested in coming into this year.
Okay, so now let's turn the page to sectors, winners and losers. Now, I know this is a weekly show, but you have some, I would say there has been quite a bit of volatility in the first half of December, which is historically accurate. And then we tend to see a run up at the close out the year. If I'm an investor right now and I missed a rally all year long, I mean, S&P's up, 17% for the year. If I missed a rally, what are you telling investors now, though, if they want to get into the market?
Well, I think there are certain areas that you should be looking at. I mean, one of them, which has been a sleeper for a long time, is biotechnology. So if you're just looking at IBB, for example, that also has done very well over the last few weeks and doesn't look like there's any reason for it to stop. Now, that is a cyclical and non-cyclical sector. But it benefits a lot, obviously, from not only people going in when they're feeling riskier, because it is a risky area. You know, one FDA uh, denial of a patent can send a biotech stock down 50, 60, 70% overnight. At the same time, you can see something happen that it can make it go really up. But I think that whole diet drug space still is a hot area for 2026. And then also some of the companies that are producing, still doing a lot of research in terms of just kind of improving our health. You know, so like, for example, you have a company like Replimune, which started as a $4 stock, got an approval. Now it's trading between 9.50 and 10.50 for pancreatic cancer. So that's, you know, a company like that. Then you have these other AI biotech companies like a CRISPR, which has really basically been still relatively cheap. Amgen, I mean, there's a lot of places that you can look in that. So I don't think that's a bad place to look. I also think a really, really good place to look would still be, you know, in terms of shipping, right? I think that's going to be a big problem for 2026 is in keeping up. Transportation is doing well, which is a good thing, but it puts pressure on the whole shipping industry to be able to deliver and deliver timely. And that's, of course, without any problems with supply chain or geopolitics or anything else that could impact the shipping. So I think that's another area. So there's a stock, Zim is probably one of the more popular ones there. I think this whole thing we're seeing with the media and OpenAI and the whole conversation with Netflix and Warner Brothers and Paramount and now Disney coming out with a big announcement of its investment into OpenAI. I think that's a whole area that can do very well, particularly if you're looking at streaming demand and creativity and content, of which I'm going to be a part of this year. So really, our timing is great. So, you know, that's kind of gold and silver. I mean, I still think hard assets are also going to be a great opportunity. DBA, which is the agricultural ETF, looks like it's on the verge of a major breakout. DBC has an oil component into, even though everybody's been negative oil, it still hasn't sold off nearly as much as people think. So I'm looking at this $57 area to hold. And if it gets back through 60. So there's lots of stuff out there. AI may not be the thing, because like I said, it's tired and it's sort of rotating, but that doesn't mean that all areas of AI will underperform. And right now, we're still looking at that whole area as overweight. You just have to be careful with your risk.
Yeah, it's a very good point. And I'm so happy you brought up media. BTT's parent company, Crosscheck Media. We love talking about media and the optimism that's out there, especially as we move more into a 21st century way of consuming entertainment and news. But I also want to touch on your gold call because at marketgauge.com, I have been reading a lot of commentary. I welcome the audience to go visit marketgauge.com to see what I'm talking about because all year long, you've been very bullish on gold and silver. Into 2026, that call has been so great for you and everything you've talked about. And you were actually one of the first analysts to really come out and be bullish on it. How about for the rest of or all of 2026 though? Is this where investors might want to start looking at as far as when it comes to the metals, or do you think there should be some pullback and take some of those profits?
By the way, we have to give a big shout out to copper too, right? I mean, that's also been
Fair
extra.
enough.
Yeah. Well, yeah, because there's a couple of things. What has changed fundamentally to make gold sell off in any significant way? Really nothing. We still have a lot of chaotic situations around the globe, and we still have a lot of bank accumulation for gold because there's still a lot of threat to fiat currency, and cryptocurrencies haven't exactly been the thing, which, by the way, the prediction is in a fire year, cryptos do very well, as you know. So this whole sell-off that we've seen in Bitcoin, where it's been trying to hold around 88,000, I still think we could see an opportunity there, by the way, if it can get and hold over 94,000, but that's an aside. Getting back to gold and silver, the thing that really got me all excited this year is two things. Number one is that, and I love number one and number two, right? I think I've said that 3 times, but I'm a teacher, so I think in a linear fashion. So
the audience loves that.
Okay, good. So yeah, my linear brain is number one is that gold silver ratio, which Todd, we've talked about that, right?
Yes.
So it broke down under 80 and then 78, which was the 2024 low. It's gotten down to around 72, and there's no reason why it can't get down to around 64, 65. And I always like to remind people in 1979-80, when we had silver go to 50
Yeah.
and gold go to 850, that ratio went to 17. So it's a good indicator on how silver still has upside room, and so does gold. But the velocity of gold's move may not be as great as what we're seeing in silver. And silver is an emotional metal. It also is in short supply, as we've heard. And we do see the public getting into it, but I still don't think that I haven't gotten to the point where, I go to the supermarket and the checkout person says to me, by the way, have you bought silver? That's when maybe we're starting to see a top. So that's number one. Number two is that ratio is really compelling. In terms of a number, silver now should really hold at 60. I think it can go up to 75. Gold has been consolidating around this 4,200 level, which tells me 45 to 4,700 is also realistic, unless things go from bad to worse in terms of some of these chaotic issues, like inflation, like geopolitics. And the dollar is number two. So everybody got like super bullish in the dollar when it got to 100. Not me. I just thought it was a short covering rally, a lot of optimism on the dollar that had no fundamental sense. And now we're seeing the dollar start to break down. And if you look at a monthly chart, which I love to look at for long-term perspective, I like to use a 23-month for a 2-year business cycle, and then an 80-month for a longer 6 to 8-year business cycle. The dollar has broken down. The last time it did that was during COVID. And of course, it came back after COVID. But now it's breaking down for completely different reasons. And I think the dollar decline, they're calling it the dollar debasement because, it's just fun and sexy to have an expression. But really, it's a serious thing. And I think it's even more serious to consider than the interest rates, because I think we're going to be capped at that 3.5% Fed fund rate while the dollar can continue puking, in essence.
Wow. Well, so just real quick, I want to make sure I have this right. $75 on silver could be a strong possibility.
Absolutely, if not higher. Some people are saying 85, but I like to
Wow.
look at things in tranches.
Yeah, that's amazing. That's amazing. So I know what you like from the sectors. What do you dislike?
Probably would stay. I mean, even though financials and banking system is supposed to do well in 2026, is another positive for the fire element. It's not something that I'm interested in
Hmm.
because I mean, we saw a big sell-off in JP Morgan this week, but I think the whole banking sector still has some issues, some
Hmm.
credit issues, particularly the regional banks, which are being dragged up, which is a good thing. We don't want to see any of these things crash, but it would not be where I would put my money, especially as we still don't really understand where banking is going. Neobanks are going to get more and more popular. Are they going to digitalize things? I mean, just how much more important are banks going to be, even outside of the retail investors, which has been a huge profit center for JP Morgan and Bank of America's because of people's, speculating in the market. But there is competition that keeps coming up, Robinhood obviously being the biggest one, but I think that's going to also take a share away from banks. So that might be my least favorite area right now.
Okay, that's fair. So, what about real estate? Yesterday we saw a rate cut. We have their front runner for the Fed chairman spot is Kevin Hassett, who is notoriously dovish and has been calling for massive and aggressive rate cut cycle. If that's the case, do you see any type of positivity coming out of the real estate sector in 2026?
Well, again, if we go back to my dear friend Raymond Lowe, he would say no, that real estate is a water industry, doesn't do well in a fire year. But
Huh.
let's forget about all the woo-woo stuff and just look at the fact that, pending sales and new home sales keep declining while housing prices are still very expensive.
Mm.
So it's not so much the interest rate. And let's also face it, I mean, people who locked in at 3 to 3.5% years ago are we going to see that level of interest rate again for any time soon that's going to make it affordable for people? And I know they're trying to come up with all these creative solutions. Obviously, there was that whole idea of a 50-year mortgage. I think that's kind of silly, but nonetheless, I don't see real estate rebounding yet. In fact, if anything, I think it can go from bad to worse, especially when I go back to my first statement about the consumer, which is, what are they worried about the most? They're worried about the fact that wages have not increased in any significant way. Obviously, we could talk about the fact that there have been layoffs, but that's, I think sort of a yin and a yang situation, keeping with the Chinese theme. And they also are worried about inflation and the cost to build, especially with copper and even wood, even though it's come down in the futures market, still super expensive to build.
Yes, absolutely correct. And that's right, because the supply to actually, or the materials to build the homes are so expensive, and therefore that higher cost is passed on to the consumer. Mish, this is a great debut episode. I can't wait for next week, because we have just a tsunami of economic data to talk about next week. We're going to have 2 labor reports. I don't know if you want to give a preview to anyone, but what's the compass look like right now? Are we going north or going south?
As far as the overall market?
Overall market. Until next week.
It's a very simple thing. If you have small caps outperforming and you have the transportation sector making new all-time highs, I don't see how you can get bearish at this point. So that would have to considerably change for me to change my mind that we are right now trotting. We're going to go to a gallop in 2026 until we have reasons to see a screeching halt.
Interesting. I like that. Well, I know we're going to say more about this next week, though, Mish. This was fantastic. And I want to encourage the audience also to send us your questions. Post them. Go on Twitter, DM us, whatever you think. We definitely will read them on the air and definitely want to get Mish's expert opinion. Until then, though, you want to go to marketgauge.com and see what Mish is saying. She's got a lot of great and valuable commentary there. Mish, what do you think for the first show? Was this a good one? A thumbs up?
I think it's a thumbs up. I love talking about this whole fire yang horse thing. So yeah, thank you for indulging me on that, because there is a lot of metaphor to it.
Well, we're going to continue talking about it. We have a lot to talk about. I can't wait. So much exciting stuff to hear going on at Financial Compass. So on behalf of Mish Schneider, I am Todd Schoenberger. We can't wait to see you again next Thursday, December 18th at 12 noon for another live episode of Financial Compass. So until then, take care.
Access real-time data and intelligent analytics exactly when you need them. Get the right data at the right time. Learn more at quotemedia.com.